Happy Thursday, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on the 20th of April, 2016. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall stance of the market this morning is slightly bullish. The markets are led by the Nasdaq up 20.5 points. The Nasdaq was a leader yesterday as well. The DAX is down 11 points or 0.09%, and the laggard today is the U.S. Treasury bond down 0.44% or 22 ticks, followed by the Euro bond. Looks like risk is on, the market's moving towards is being on for today. The S&P is currently trading 39.50 in what we saw in the overnight session. Real quick, looks like President Trump is taking another stab at Trump Care, or replacing Obamacare, or the new Health Care Act. And then China is also relieving some of the restrictions of money leaving China. The US dollar weakening has caused this to be something that they would allow. Um, the UK Parliament backs an early election that was announced by Prime Minister May. And then this morning we got initial jobless claims coming in at 244,000 versus 240,000, slightly worse. Continuing claims 1.98 million versus 2.02 expected. This is the lowest continuing claims level since April of 2000. We also got Philly Fed at 7:30 Central, 8:30 Eastern. Philly Fed Business Outlook came in at 22, lower than the 25.5 expected. This is the lowest since December. And then, of course, we got earnings from some key blue chips. American Express came in at $1.34 versus $1.28. Canadian Pacific Railway came in at 250 in line. CSX came in at 51 versus 43. eBay came in at 49 versus 48, also beating on revenue. Nestle in Switzerland also came in line, or missed by about 300 million, and so on and so forth. Pay attention to earnings. It tells us how much room there is still on the upside with this market. It's a fundamental indication. As far as what we are expecting for the rest of the day, at 10 o'clock Eastern, 9 Central, we get U.S. leading index for March, expecting 0.2, the prior 0.6. Also at the same time, we get Eurozone consumer confidence advanced for April, negative 4.8 expected, the prior is negative 5. And then as far as speakers, we get BOE speaker Carney at 11:30 and 12:30 Eastern, and that pretty much does it. After the market, the key releases from Visa, expecting 79 cents. Let's switch gears here and look at what we expected yesterday. The primary hypothesis yesterday, the key idea for yesterday was a market that would open in an open auction out of range, drop into the 41 quarter to 40 even area, find support, and then start moving out and above the 2-day high of around 46 with a target of 53. That was the primary hypothesis. That hypothesis did not work out. It did not come to fruition. The secondary hypothesis, though, pretty much exactly what we got. Open auction, push up early, and then attempt to push through and find sellers up ahead of the 50, around 49.50 area. Rotate down, test 38 for a bounce, and then continue to push through down into the 35. This is the 35 was expected to be the 35.50 or so. Actually, 36 was expected to be an important support area. 38 was expecting a bounce on the first test. Here's what actually happened. There's the open auction. Market pushes up to 49 and a quarter, missing the 50 by about 3 ticks. Market starts to rotate down. At this point, we see that we may have Hypo 2. Remember, Hypo 1 was the market moving down into the 41 area down here, finding support, finding buyers, turning around, pushing up to 53. It initially pushes up to around 50 where we expected it to, and then it continued to test lower. It drops into the prior day's range. A pullback fails, like I show in the hypo. Here we go. There's the pullback failure right there. The pullback fails to make new highs, and then the next leg is expected to be down, and it's expected to push down into 38. 38 gets us a bounce of about 3.5 points. That's all we got out of the 38. I expected a higher bounce on the first test of the MC point of control. Still 3.5 points is not too bad. Rests there. Remember, the MC point of control is an acceptance area. Rests there for a while. You could see it just battling this zone here for about an hour and a half, almost 2 hours, and then it finally releases to the downside and continues lower. The low is still not breached, so we still have a higher high. The prior day's low is lower, so we have higher highs and continuing higher highs, higher lows. On price, value has shifted. The point of control has shifted up, but value has not. Yesterday could not find real value. We have another key LVN right up here at 43.50. That's we're seeing the same kind of pattern. Let me remove these scribbles here and squish this a little bit to show you. We're seeing the same kind of pattern where the point of control stays near the highs. The key LVN stays near highs. There's a point of control that stays near highs, and then we had one that's in the middle on Tuesday. But then again, we resumed this point of control that's near highs. In my opinion, the market is, despite the move that we had yesterday, the market does still have some room to the upside. It's still able to maintain higher and higher value and higher point of control on a day-to-day basis. Okay, so I would say that it's not ready yet, but it's definitely, in my opinion, primed to continue higher. The overnight session saw immediate. The Asian session was quiet as usual, and then it saw an immediate push up on the European Open and has sat there sideways throughout the session. The Philly Fed didn't really have an effect on here. Neither did the initial claims this morning that came out about a half hour ago. And the market has moved to about the mid of yesterday's range. Notice that most of the volume has occurred in the European session up top, and this is set up to potentially push up for a continuation move. Of course, it's running out of time before the open. Let's get down to the hypos here to let you guys move on with your business. So again, here we are. We're trading inside of this range, right? It's really important to recognize that we continue to trade inside of this range. As I shift this profile forward, you want to keep an eye on this profile here and see where the volume is coming in. How is it filling in? What is trading? You see it filling in a little bit up top. As I mentioned, the market is accepting and is trading quite a bit higher. And then as we reach lower here, there's a little bit of volume that kicks in the 34 range, 33, 34 range, but most of the volume that has come in is near the highs. Again, here it is. As we go from yesterday to include today's session, you can see that the point of control, it looks like it might shift right here. That area there is getting a fair amount of volume, and it might shift that point of control up at some point as we revisit. So you can see that line getting bigger and bigger, the profile getting bigger and bigger at that price. And so here we stand. The MC point of control shifted down just slightly But overall, 37, 38 remains a key area to test. Again, we're skipping through it today. I'm expecting, given the way we're set up on the overnight, right? The overnight session is has a buy imbalance. The way we're set up on the overnight, I'm expecting again we're opening right inside of the prior day's range, open auction again, unfortunately, and I'm expecting a responsive seller to come in, and I'm looking for a base, and then I'm looking for this to push to 43, that key LVN, and then to attack the 46 as the primary test area. I'm looking for the market to take back the selling. What we're seeing today is basically what we saw here last Thursday versus Monday, although Monday was a holiday in Europe. That's basically what we've got right now, and that's our primary hypothesis. I expect the market to expand upwards. It is primed to go higher, in my opinion. And that's your primary hypothesis. The secondary hypothesis, open auction, it attempts to go higher, pushes to 43, finds some resistance, balances out, and then moves to 38, breaks through, and then pushes to the prior day's close. And then I'm looking for it to balance in the middle here as the secondary hypothesis. These are tough hypotheses to trade because they both look alike. Wow, that circle is not going to look like a circle, boy. Um, these both of these hypotheses are not going to look like which. It's not going to be obvious which one is in favor early. So this is another one of those days where you have to sit and wait for the first 20 minutes to a half hour to see which side is pushing. So that's what I'm going to leave you with. Thanks to those who attended the AMA yesterday. I know we didn't cover as many questions as we would have liked, but I appreciate your attendance. I think it was packed full. 500 spots were available and about 600 or so registered. So I appreciate that. Anyway, have a great day. Watch your risk and enjoy your trading. Just take your time today and pick your spots. Good luck. Take care.